Hi traders, we're back with another episode of Technical Tuesdays. Again, this will be pre-recorded 5 minutes before, but I will be live in the chat room within TradingView if any questions are posed. So let's get cracking. We start off with the dollar like we always do. We can see the dollar's had a really strong rally. That 100 mark, which I think would really start to get currency markets a little bit nervous, is in sight. It's close, and we're seeing a bit of a turning, a rolling over of the RSI. It's quite overbought at 85. Previously, we saw those kind of levels around here on the 18th of June, but definitely not as strong a price move. In terms of levels to watch, there's probably a bit of support here that could come in at 98, the previous highs of those candles. It's quite hard to analyze the charts technically at the moment because things are so fluid. It's all flows based, fundamentals are coming through quick and fast, news flow, headlines, you name it. So name of the game, keep positioning light, keep nimble out there. Moving on to the euro US dollar, we're seeing a bit of a bid come in this morning as we got close to that 108 level. And that's just down to the fact that we saw the Bloomberg headlines come out that they want to do a massive joint bond sale for spending in energy and defense. It's sort of seen as a kind of another EU recovery fund, quasi fiscal union. And that's why we're seeing a bit of a bid here. In the euro, it'll probably help the growth picture too. Interesting one. In terms of levels that I'd be looking at, 110, the round number. It'll have to get through this downtrend lower line of the descending channel. And above there, we've got a bit of resistance there at just above 111, 21-day exponential moving average there too. We've got the RSI, it's curling back up again from deeply oversold. So that's one thing to monitor. Moving on to GBP USD, we can see that it slipped right through that retracement, the Fibonacci retracement level. RSI again in oversold territory. We're putting in a bit of a doji candle here. We could be seeing a reversal at this 130 level. In terms of targets, 132 would be the level. We can see there's a bit of stickiness there. That would be the level that I'd be looking towards in terms of resistance. On the downside, 130, the big round number, would be the level. It will probably come into play with the lower line of this descending channel too. Moving on to Euro GBP, we saw quite a strong rally here. Again, it got down to almost 0.82. That is quite strong technical damage. We haven't got that low since Brexit. Below 0.83, properly breached. The RSI did show a tiny bit of negative divergence here. However, that's a good sign. Sorry, what am I saying? There's no divergence there. That's gone lower, so that makes no sense. Forgive me there, haven't had my morning coffee yet. We're seeing the rally though. RSI got just down to oversold, almost touched the oversold region of 30. It's rallying strongly now. Let's see if this is just a rally into that 0.83 level and we're going to see a further rolling over, giving the shorts the opportunity to fade this rally. On the downside, again, 0.82 would be my target. I also just want to take a quick look at Euro CHF, just because we broke that parity level, which hasn't been broken since 2015 when they removed the peg to the euro at 1.2. So we saw it break below parity very, very minorly overnight last night. 2 nights ago on Sunday evening, and we saw it get just below that one level. Now we've rallied slightly back up above it. We had some commentary out from the Swiss National Bank that they would intervene if necessary, and if they see the Swiss franc is quite highly valued at the moment. So hence why we're seeing a bit of a pullback here, as well as the positive euro news. Let's move on to US dollar JPY. Again, US dollar JPY, it just can't seem to break this 115.5 resistance level. The RSI is also capped here, around here, 56, and above there, 65. These are both safe havens, but I would say the dollar has the edge, given that they're more energy independent than Japan is. Very large net oil importer, Japan, and with that surge in crude, it's not helping their terms of trade. And we've seen that terms of trade is increasingly important, particularly with currencies like the Aussie dollar and AUD JPY. Euro AUD has absolutely slumped. So let's move on to AUD JPY. We are seeing a bit of a turnover here, a bit of a recovery, as we see basically the AUD commodity prices come off a touch. And we got the next level of support here is about 84, just above that 21-day exponential moving average. The RSI got quite close to overbought, but it peaked just before they rolled over. It's back below the 62 level, which acted as resistance on previous rallies. We'll see if it'll come back down here, potentially to the 50-day simple moving average, or if this is just a minor retracement where the dips will be bought for price to continue higher. Gold continues to charge high. It's above that 2000 mark. The RSI is deeply overbought, not quite. It's slightly more overbought than when we saw in May. And this little indicator here, the percentage above below the moving average, has broken through the 6.6 level, and we're at just over 8 now. So big divergence between the 50-day simple moving average. The mean reversion players are starting to have a look at this. In terms of targets, I would say 225 would be the next level. 2025, and then on the downside, maybe there's a little gap here in the chart at around 1975, around 1970. Price could come back there to test that. Maybe it'll come back down to this former resistance line on the RSI too. Let's finish off in commodity land with oil. Brent crude's just shy of 130. Again, big dislocation from the moving averages, similar to gold. We're going to see this across the commodity space. It's gone up almost in a straight line. RSI is deeply overbought, but we can become more overbought. You can't just rely on that as a signal to start selling. And I'd say 120 would be the level on the downside to monitor in terms of if price was retracing. I'd want to see what price does around there. On the upside, from here, 130, 135, 140, potentially 150. If we see the situation in Russia, Ukraine deteriorate further, and that embargo on oil from the US taking place. Then let's just have a quick look at the Fed fund futures. We like to look at what markets are pricing in here. So 6 rate hikes by the end of this year in December. Just shy of 4.7 here for September. July is just shy of 4. April's fallen quite a lot lower now from 2, where we saw early Feb. We're down to about 1.3, and March is just below 1. But we know that Powell is very likely to hike by 25 basis points at next week's meeting. Thanks for joining. That's it for this week's episode of Technical Tuesdays. I hope you found it informative, and I'll see you all next week.